What is up, guys? Welcome back to my channel, GGFOREX here, and it's been a minute since I've made like a long video. I don't know why. Well, I do know why. Been incredibly busy. I'm in the process of moving. Anyway, excuses out the window. What I'm going to do is I'm going to do a trade breakdown. I haven't done one of these in a while. I know it helps a lot, and I just kind of want you to understand how simple trading can be. And the tricky thing is your mindset. It's all down to your mindset. I think strategy is 20%. Then maybe 30% is systems that you have in place to do certain things, and obviously your trade plan. And then the rest of it, the 50%, is mindset, 100%. So guys, let me just dive into this, show you guys how I look at the charts and how it tells a story, and hopefully, you know, it can help you guys out. If you have any questions, let me know in the comment box below, and I'll make a video answering those questions next, more recently. So let's just dive in. Okay guys, so let me just show you a trade that I was in a couple of weeks ago or 2 weeks ago, and how I could have got 3 more entries within that trade itself. And it's purely just such a simple process. I think most people overthink it. I've made a couple of videos before, overthinking trades and all that stuff. But let me just use the replay tool and show you what I was looking at, right? I know you're thinking ours is hindsight, but it wasn't, okay? I've already had this planned out. I'll go back and show you the screenshots as well and time and date it of what I was looking at in the first place, just to prove a point to all the naysayers out there. So, right, price is coming to my point of interest. What do I want to see? Well, first thing I'm going to look at is, has it broke structure? Yes, if you have a look, price is stepping down, right? It's still respecting the highs and disrespecting the lows. Right, see that, and then boom. So we got a break of structure. That's the first thing. What else do I see? RSI moving up. So I say, hey, price is moving down, but the strength of this currency, the New Zealand dollar, is going up. All right, that's 2 things. So what else do I want to see? Well, I want to see liquidity. I want to see a reason for price to go up as well. Well, 1, we're in a massive premium area in a higher time frame, hence this grey box. And 2, let's just draw the fibs to the top. Right, we also have liquidity because what did it do? Sorry, now I skipped a step. What did it do? Well, what are traders going to see this as? Double tops, maybe an M. So when they see M's, what they're going to do, they're going to think, oh, price is going to, I don't know, hit off this resistance or whatever and then move down, right? So I see this as liquidity. I see this as a reason for price to go higher, not a reason for price to retrace and continue lower, right? Remember, we've already got broker structure. We've already got strong bearish divergence. We're already in a higher time frame point of interest. And now I just want to look for a nice discounted area for price to come back to, right? So if you draw the fibs out, for me, getting involved would be down here. We have a bunch of imbalance or IPA, whatever you want to call it. In this area, I'll just change it to red so it's easier for you guys to see. Right, so I know that there's a lot of selling going on here and then a crap ton of buying, and it left some price inefficiency down here. So I feel like, okay, maybe the algorithms want to come back and fill this IPA. So really, you could have just taken the trade. Well, for me, I did take the trade off this. I'll show you in a sec. Right, take the trade off of this. Price moved high, just targeting the highs for a 1 to 2.5, which is perfectly fine. Right, so that's already one trade you can do. Right, set the pendings, let it play out. It takes a while for price to come down to your point of interest anyway. Right, okay, so price has now triggered you in. How could you look for another trade on this? Well, same process again. Just move this across. Just let price play out. So price is still disrespecting the lows and respecting the highs. We want to see some sort of break. Still haven't got that yet. Still respecting the highs. And then boom, right, we have a break. Okay, so you can see price doing exactly the same thing as it was doing on a higher time frame. Right, still respecting bearish structure on this time frame. And then made a high low and now a higher high. So what can we expect? Some sort of high low, something like that, right? And what else do we see? Price moving down, RSI moving up. So it's exactly the same thing on a different time frame. Everything in the markets is fractal. Let me just zoom out so I can
move stuff for you. And again, you could easily just go, there's the IPA on the lower time frame. There's the protected low, because this low got respected, this high got disrespected, so this is my protected low, and you can just target the same TP again. Right, almost a 1 to 5, and just let price play out. That triggered you in, came back in, you probably would have pooped your pants a little bit if your mindset wasn't quite right. Price is moving up. Big scary moment again, so if your mindset wasn't right, you probably would have pooped your pants. I think there was high impact news on this as well, but again, what are we saying? If this low broke this high, then that should be the protected low. It is, it still respected it, it just liquidated internal liquidity. Overall, this is where they put the huge buys in. This is the low they want to be protected, otherwise they'll be in drawdown, right? And when I say they, I mean the banks, because obviously the institutions, the composite man, whatever you want to call it, they are the ones that move the market. They're the ones that have the billions at disposal. So, what do we see? Price is now broke this structure, right? And then it also broke, or now we're waiting for it to break this structure. I do it above the bodies because at the end of the day, it's where price closes. It's fine if price goes to a high, like people say, oh, if the wick breaks structure, it counts. I'm not really a fan on that because to me, price hasn't closed above. I don't want it just to go higher and then reject off. I want it to go higher and stay higher. It means a lot more to me, so hence why I go by bodies. So again, same process. I'm going to wait for a retracement. Just let price play out. It's moving higher. Okay, we're getting a retracement. For me, I'll just draw the fibs because I want to do another discounted zone for me to get involved in this trade. Right, we already have everything I want to see. Again, it's all played out fractally on the markets. Now, depending on your risk, you need to understand that maybe you're not going to get all 3 trades. Maybe you're only going to get 1. It depends all on your risk factor and how you like to manage that trade. Because obviously, if you're in a funded challenge, you don't want to break certain rules or whatever. So just bear that in the back of your mind when you're stacking trades. Just move this across. Move this across as well. So we can see we're in 3 positions. Well, we're not in 3, we're in 2. And we'll see if we're going to be in 3. Let's just play this out. It's been triggered in. Prices mess around for a bit. And then boom. Right, so prices continue moving up. It has now taken this liquidity. So people would have seen this as resistance. They would have seen price consolidate and slow down towards resistance, drawing in more retail traders. And what it do? It hit it, rejected off, brought in more retail traders to say, hey, look, it's bearish engulfing. It hit this resistance. And then what? Bang. It pushed right through, came down, and continued going up. Right? So yeah, that is it. That is a simple trade breakdown. I can't really break it down simple enough. That is 3 trades. One was a 1 to 2.5. What was the other one? One was a 1 to 4.5, and the other one was a 1 to 3. So a nice reward there, a nice gain. Obviously, it would have taken you roughly 2 weeks for all these trades to play out. It is a New Zealand dollar pair, so it does move quite slow. It is an Asian pair, so I'm perfectly happy with trading New Zealand dollar pairs and Aussie pairs. I have the patience to wait for them to play out. But overall, great trade. Simple as that. Premium area or discounted area. Wait for proof. Get the proof. Take the trade. Don't overthink the trade. Follow your systems. And yeah, that is basically it. So hopefully that has explained a lot to you guys. And if you've got any questions, let me know in the comment box down below. And I'll happily answer them for you.
So guys, I hope that helped you out. Maybe you're trying to figure out what to do, but really it's simple as that. When you have a plan and it's proven, right? You've back tested it. The hardest thing for you to do is trust it. I understand when you back test things, you don't have that emotion of live trading because obviously when you're back testing, each candle is a second, right? But in reality, when you're watching that candle go up, go down, go up, go down, maybe it's for an hour and then you've got about 12 of them, so you're looking at it for 12 hours or whatever for a certain amount of days, your emotions going to get involved. Your emotions could be like, oh, it's going to hit TP. No, it's not. Oh, it's going to hit my stop loss. No, it's not. And all of those sort of feelings and reactions and emotions you have affects your trading. So I do recommend, obviously, back testing, because you need to prove that what you want to do works, and you can see it working multiple times through history. But in order for you to conquer that strategy and make it play out well and let the numbers speak for itself, you have to forward test it. And that's going to take time, that's going to take effort, and obviously if you guys want to do this in the long run, that's something you're going to have to do. But yes, so simple trade breakdown. You've turned one trade into 3 trades using the same method on the lower time frames, using the fractal nature of the market, and just letting the trade play out. Anyway guys, hope this helped. If you have got any questions, let me know in the comments down below. Bye.